You're a global company. About 25% of your business is outside North America. How are you dealing with the disruptions to the global supply chain?
Well, for us, there hasn't been a big disruption from trade. The toughest part for us has actually been Brexit, or at least the threat of Brexit. But otherwise, whether it's what we sell in Canada or in Europe or in China, we haven't seen a big impact from our trade.
What's going to happen to you if Boris Johnson wins leadership of the Conservative Party and Britain exits the European Union?
Well, our plan will be still grow our business in the UK, as we have this year. We're the fastest growing food company, or at least one of them in the UK, and maintain our presence in continental Europe. And we'll find a way through, as we always have.
It's just going to be what, more costly?
It'll be more difficult. But General Mills has been around 150 years because we've always adapted to change, and this will be one more change. And it may take us a month or two or a year or two, but we'll adapt to that change too if it comes around.
Can you feel already what the indicators show that the global economy is slowing?
We really can't. I mean, our business has been really good. Our U.S. business, we had the best quarter on sales that we've had in a while, and through grocery stores. And our business in China is growing. Our business in Brazil is growing. Probably the toughest place for us in the world right now is in France. That's actually where we feel a little bit of a slower growth. But otherwise we haven't.
I couldn't help but notice after you reported earnings yesterday that the analysts on your conference call wanted to talk about one thing and pretty much one thing only, Blue Buffalo, the premier pet food company that you bought last year. You had a head start, clearly, and you made the most of it, but premium pet food is exploding as a category.
It is.
How do you manage the competition?
Well, for us, it's one of the things we're most excited about is that the premium part of the category is growing, and wholesome natural products are growing, and we're leading that growth. And for us, we're excited the whole segment is growing, and we feel like we've got the best brand. And the key to growing brands in pet food is very similar to what it is in human food, and that is to make sure you execute well and you innovate. And we've got some good innovation coming out. We've launched some new innovation, and so we love what happened in the first year of Blue Buffalo under General Mills ownership, and we think we're going to have a good second year as well.
Some of the startups in the premium pet food category are starting to make pet food with human-grade ingredients. Is that where the industry is headed?
Well, I think pets have certain needs, certain nutritional needs, and so while you want to make sure that there is a trend toward humanization of pet food, but it still needs to be pet food because it's really important that whether you have dogs or cats, they get the nutrients that they require. And so while there is the trend toward humanization, it's very clear that pet food is pet food, and the nutritional needs of the animals come first.
Now, the other thing that's exploding in food is plant-based food.
Yes.
General Mills was an investor in Beyond Meat, correct?
Yes, one of the first ones.
What kind of a return did you generate on that investment so far?
So far, so good. Well, what I would say is more broadly, General Mills, created an investment arm called 301 Inc., where we invest in small companies, and Beyond Meat was one of our very first investments, a very small investment, I might add.
So beyond your little venture fund, if you will, the Skunk Works, how do you ride the wave of interest in and demand for plant-based food products?
Well, when we think about innovation, we need to play all the keys of the innovation piano, and some of that's investing in small startup companies. A lot of that is investing in our own capabilities and our own new products. And sometimes we go out and buy companies like we did with Blue Buffalo or with Annie's or with Epic. So as we think about innovation and maintaining food trends, we'll look at all those trends, and that will be the case with plant-based, where we have something like Kite Hill, where we have plant-based minority investment in Kite Hill, which is a plant-based yogurt company, or whether we develop plant-based alternatives ourselves.
Now, I want to go back to earnings for a moment, because much is made, rightly or wrongly, about whether you do or don't beat earnings estimates.
Yes.
A lot of CEOs and investors, Warren Buffett and Jamie Dimon no less, say short-termism is a plague on the stock market. And they want CEOs like you to stop giving out earnings guidance. Would you be prepared to do that?
No, I think look, we're fine with giving earnings guidance. It's interesting. We don't actually give earnings guidance for a quarter. We give it for a year. And for me, that's how you play the long game. And, sometimes there are pluses and minuses within any quarter. But one of the things we're most proud of is this last year, we beat our earnings guidance. We beat our earnings per share guidance. We beat our free cash flow guidance. And we hit our sales guidance. And that's over the course of the year. And things fluctuate quarter to quarter. But over the course of that year, we did what we said we were going to do.
Would you agree that short-termism is a problem in the stock market?
It certainly can be. It can be if you let it. and it can be if you let it as a CEO. And
how do you fight it?
My job as a CEO is make sure that the people within our organization know the context in which we're operating. So, for example, our stock went down a little bit yesterday when we announced earnings, but it had gone up a lot before that. And so what we tell them, look over the past year and what our stock has done. Don't look at over a 24-hour period of what may or may not happen.
Jeff, I can't help but think back to that mammoth $15 billion write-down that Kraft Heinz had to take. Tell me, how do you at General Mills perceive and feel the pain of changing consumer tastes most acutely?
Well, for us, I mean, one of the, I made a comment earlier about being around 150 years, and that's because we've been willing to change. And if you look at our portfolio, we acquired Annie's and Larabar and Epic and Blue Buffalo, and we remain competitive in the cereal category. We've taken over #1 share leadership in the cereal category. So for us, food values have changed over time. They're going to continue to change over time. We need to make sure as a company, whether it's through acquisitions or what we do internally, that we're keeping up with consumer food values, and that we're not only focused on driving out costs, but we're focused on growth.
What do you think are the lessons for big food in the struggles at Kraft Heinz?
That you need to grow. That the only path to long-term sustainability for a food company is sustainable growth. And we need to make money while we're doing it and reward shareholders and the pension holders who hold our stock. I mean, General Mills has paid a dividend for over 100 years without reduction. So we owe money to our shareholders, but the way we do that really, first and foremost, is through sustainable sales growth.